Good evening. This is Tom Alexander. This is the weekend U.S. stock market update for the week of Monday, October 20th. It is Sunday, October 19th. I'm recording this before Globex begins trading. So if something wild happens in Globex that affects this, what can I say? I'll send out another update. We are at a juncture now where you have to be alert for a very sharp move. I said the same thing in the special report that I put out on Thursday, and I want to go through that. And we're going to really focus today on auction market concepts and using the market profile graph. So let's look at some charts here, and I'll show you what I'm talking about. Okay. First and foremost, as I have said many times, and I tell all my clients and mentoring students, I don't want you to be a market profile trader. I want you to be an auction market trader. We are trading auction markets. That's undeniable. It's indisputable. It is a fact. There is an auction market process of development that is followed by all the markets that we're trading in all degrees of time. Now, the market profile graph, there's nothing magic about it. It gives a particular perspective of trade that can be unique at times because it highlights trade activity on the horizontal scale of the chart. And that's what it was designed to do when it was initially posited by Peter Settlemeyer. It was designed to show really what he saw in the pit. He saw an auction in the pit develop, and that's what this market profile graph does. Now, I use bar charts 95% of the time in my trading, my trade execution. But at times, nothing gives a better perspective of market condition than a profile chart. And I think this is one of those times. So let's take a look here. I'm going to go through, let's look at, there's several perspectives I want to show you, none of which I can find at the moment. Hold on a minute. Let's do this. Okay, I want to make this the S&P. So let's just do this. Okay, here we go. Now, what you see on my screen are profiles, market profiles. Okay, each profile unit is 1 month of trade, and if we take the current, this was September, this is October to date. If we fold this into the one auction that it actually is, you can see there's this high volume node right here that I have highlighted. By the way, I'm not going to go through all the charts that I have posted on the website in this video. If you want more charts and you want to study these charts in detail, please go to the website, alexandertrading.com, click on weekend update, click on the date for the day, and you can download the PDF. You can also see other weekend reports I've done going back several years. Also, if you find value in this, please like, subscribe, hit the notification bell, et cetera, et cetera. Okay, thank you. All right, now, so back to where we are. So this is the October-September auction, and we are coiled so tightly. I'm going to split this out. So this is the recent trade. Look at the high volume node here. And we closed just on the upper extreme of the high volume node on Friday. What this is telling you is this is one phase of development in the auction process. This is balance. Markets in all degrees of time follow this general process of moving from balance to imbalance. They're always somewhere in that process, but one follows the other. When a market is balanced, it's about to break into imbalance in that time frame. That's where we are. That is telling us there is a very high probability of a sharp move occurring soon. Now, I wish I could tell you it's time and this thing is ready to pop now. We could build balance in here for the next week. I don't know. But this is long enough. If you go back and you study and you look at these charts, and I've been looking at this stuff for 40 years, this thing is close. Now, I've seen it go two or three times longer than this. But if most of the time when you've gone 4 or 5 weeks like this and you've built balance in this Gaussian shape in this range that we've been in, you want to be alert for that initiative move. And that's actually tradable information in regards to the time frame you trade. I'm not going to get into trading strategy and tactics, but those of you that trade should be able to understand that if you are expecting or there is a higher probability than random that there's about a sharp move is about to occur, that can affect your strategy and your tactics. And there are certain strategies and tactics that are more favorable for that type of market condition than others. So it's actually tradable information. Okay, so this is the SPX. I want to show the NDX. Here's the NDX. And this is, I messed up my, it's in a very similar position. Actually, let me go down to the daily. Here we go. So it's pretty close to the same picture that we see in the SPX, the NDX. We closed right at the midpoint of the high volume node for the month of October so far. Now, again, this is the most bullish looking chart. My dog's in my lap. She wants to get down. This is the most bullish looking chart that we have across the board, which stands to reason. The NDX is the index that has been leading this market higher. Now it gets interesting. Let's look at some other charts. Let's go to the Dow. Here's the Dow. Okay. Now the Dow is closed below the high volume node of the monthly auction so far, and it's closed right at the lower cusp of, well, actually, I'll take that back when I spread it out like this. It's right at the midpoint of the high volume node from September. Okay, now let's take a look at the New York Composite, the broadest of the indices that we follow, and it is closing below the high volume node for October and the high volume node for September. Here's the close. Let's look at the equal weight S&P. It is also closing now below, this is almost a double distribution, and it's into the lower distribution for the month of October, assuming this is a double distribution. It's also closing below the September high volume node. That goes on the bearish side of the ledger. The Russell, which had an interesting move last week. Now it's spiked to a new all-time high, but you can see it is pushing the downside of the high volume node for the month of October. So what's the takeaway from this? Well, once again, we see a very bifurcated market. We have a dozen stocks that are driving two indices, the SPX and the NDX higher, with the other indices lagging to varying degrees. However, all of the indices, regardless of which way they're leaning, are in balance. So all of them are suggesting a sharp move. It's just that if you're trying to get a read on the direction of that sharp move, they're not in sync. So what looks like is going to happen to me is that we're going to see the Russell, the New York Composite, the equal weight S&P catch on fire again and trade higher through their respective high volume nodes for the month of October, or you're going to continue to see them to drive lower, and you're going to see the S&P and the NDX, instead of breaking to the upside out of their respective balance areas, break to the downside. So there's no point in me going through a lot of technical stuff because price action is what is going to drive this market, and the technicals will follow the price action. The technicals are mixed. VIX is still relatively elevated based on recent trade. That would go on the bearish side of the ledger, but all it takes for VIX to drop is for the powers that be, the big money participants, to get a little more comfortable with the current levels. If VIX drops, that could fuel a further rally. You guys enjoy the rest of your weekend. And again, if you found value in this, please like and subscribe. I'll talk with you again very, very soon.